Hey guys, Keltner here. Welcome back to another video. Today I want to talk a little bit about strategy development and update you on what I've been doing over my winter break. You guys remember in last week's video I gave you 5 tips on things that you should be doing to kind of wrap up your trading year and get yourself ready for next year. And 3 of those things were 1, stop trading, 2, continued education, and 3, strategy development / back testing. And I've been hard at work on the last 2. It's actually been kind of a mix, right? In the process of strategy development, I've gone back and done continued education so I can read up, become better with, and kind of spark some new ideas for the strategy that I want to build. And I wanted to talk about this because this is very interesting. A lot of people are really quick to ditch strategies, and one that I've been working on, and who knows if it ends up working or not, but I've been working on it for the better part of 2 to 3 years. And when I say better part, since I'm a coach, I only get small windows to actually work on my own trading. So summer sessions and kind of winter sessions for the last 3 years. And up to this point, it hasn't been able to work the way that I wanted it to work. And what's really important about understanding that is that you don't want to ditch the entire idea of something just because it doesn't work. And what I mean is this. A strategy typically isn't one thing. And in fact, I would feel comfortable saying a strategy is not one thing. There is no one thing in the market that works by itself. A strategy is taking different elements, combining them together and creating that edge. And when you're doing that, imagine like a whole bunch of different mechanical parts put into a system to create one profit-making machine. Well, in any type of system, any type of circuit, right? If one thing is out of place, that entire circuit, that entire system may fail, even if there are other things that are good. And typically when you're developing strategies, when you're backtesting stuff, you have a lot of ideas that are actually really good, but maybe there's 1 or 2 or one thing that needs to be tweaked that doesn't allow the system to be profitable. And the mistake that I see many traders make is that when that happens, they throw everything away. My advice to you as traders is keep notes, right? Keep in your toolkit the things that work, whether it's a entry method, whether it's a stop loss technique, whether it's an active trade management, a trail stop technique, or a target taking technique, right? Always keep them in the toolbox because you'll never know when they may come back to help you later, right? Same thing goes for indicator settings, right? During my strategy development, I recommend everyone doing this. You're typically tweaking and playing around with different settings for your indicator, right? I've always said that the default setting of your indicator probably won't work. You have to tweak it and adjust it based on what you want to get. And whenever you make those tweaks, you're adding it to do this, be faster, to be slower, to be whatever, right? Don't forget about those numbers. Write them down, put them in notes somewhere, keep them for later because you may come back and use them. And that's exactly what I did this round of strategy development. I actually went back to initially revisit a Bollinger Band strategy that I was working with. And I went back into it. I had some new ideas. I played around and still couldn't get it to work the way I wanted it to work. Then I decided to go back to another trading strategy that I was working with years before that used Keltner channels, which are similar to Bollinger Bands, but not quite the same. And I actually prefer Keltner channels a little bit more because they're based off something that I already use in the market, which is the average true range. And what I did was I wanted to take some of those ideas from the Bollinger Band strategy and test them out on Keltner channels. And between a lot of trial and error, I finally come up with something that may, right, keyword may, make it to the true back testing phase. Now I'm going to dig into charts and kind of show you exactly what I'm looking at, but these ideas aren't mine. I didn't make them up. I'm no genius or anything like that. I actually got them from 2 different trading books that I've read early on in my trading career. One, the Bollinger Band strategy, is from a book from Kathy Lynn called The Little Book of Currency Trading, right? She's someone that I follow on investing.com for a very long time, just reading up on news and market stuff. And when I heard about this strategy of hers, I invested in the book, and she talks about it in here. I hope you guys can see it. And I checked it out. The Keltner channel idea, right, which is very similar to Bollinger Bands, comes from one of my favorite books, The Art and Science of Trading by Adam Grimes. Funny, right? Big book, skinny book, tall book, thick book, 2 completely different books. Now, with the Little Book of Currency Trading, I don't really recommend this for much else unless you're a very new trader. The Art and Science of Technical Analysis, this is a book that I recommend every single trader reads, but not right away. So if you're a rookie trader, don't read this. You're going to get overwhelmed. You're going to get confused. But once you have an idea of technical analysis, once you have that foundational level of kind of knowledge about technical analysis, this is a great book. Adam Grimes is one of my favorite guys on the planet. So make sure you check this out. So again, many people out there will brag about, oh, I made this strategy or I'm developing this strategy. And I actually had my best friend who threw away many very successful trading strategies because they weren't his own and wasted years and years and years doing that. He's a great options trader now, by the way. He had that moment of kind of self-reflection where he realized it doesn't matter if I trade it or not. I'm just here to make money. But many of you guys are out there, and I want to put out the message, leave your ego out of it, right? Do something that makes money. You can always kind of feed your ego by creating something a little bit later in life. But anyway, let's hop into the charts. Let me just show you kind of a brief look at what I'm looking at, then I'll let you guys go. So I want to break down what I'm using and what I'm looking for here in this strategy. I'm going to do it in kind of the most brief remedial way possible. And I'm not doing that out of any kind of secretism or anything like that. Trust me, this strategy right now is not even at the point where it's tradable. It's not even at the point where it's really back testable. It's still kind of going through the eye test and acquiring ideas and finishing up kind of filling the gaps in the trading plan before we can go into the real testing once we have everything 100% rules based. But another reason is because I know how the internet works, right? Many of you guys out there watching me are good traders. You understand my message. You know what we stand for. You look at this as an educational resource, something to spark ideas, something to kind of keep you in the mix with trading. But there's still that small minority out there that watches YouTube videos. And you're going to look at this, and you're going to try to trade it right away. You're not going to test it. You're going to throw live money at the market, and you're going to blow it. And I don't want to be responsible for that. So I'm not even going to give you that temptation. But essentially, I have two layers of Keltner channels. And again, this is kind of mimicking the double Bollinger Band strategy just with Keltner channels, which is an indicator that I prefer a little bit more just based on how they work. The outside bands are going to be tweaked a little bit. Your default, I believe, is 2. For the Keltner channels, right? Your multiplier for the default is 2. I've got it up to 2.25, which is something that I got from Adam Grimes. And then I have a 1 period for the red line inside. So that's going to be a multiplier of 1 on those Keltner channels. And again, basically the outside lines are kind of showing you the extremes of price action, not quite the same standard deviation that Bollinger Bands show, but think about it as like a volatility band where price action spends a very small minority of time outside of that 2.25 mark. And then you got your inside bands that kind of represent kind of consolidation, right? We know that markets are choppy. When you're inside that zone, it represents a consolidative market, which can either be used as a different type of trading style, as you'll see really quickly, or kind of a warning sign to stay out. But there's 3 types of trades that I'm looking for here. I'm looking for counter trend big band trades. I'm looking for counter trend small band trades, and I'm looking for trend continuation trades. And think of your counter trend big band trades as being trades that reach the extremes of the Bollinger Bands, whether it's the extreme high band, or sorry, the Keltner channel reaches, again, started off with Bollinger Bands and just made the switch last week. Those counter trend big band trades are going to be ones that reach the extreme. So the extreme on the top, the extreme on the bottom. So when you hit an extreme on the top, you're looking for counter trend trading opportunities, so short opportunities. When you reach an extreme on the bottom, you're looking for counter trend trading opportunities, which means long opportunities. Now, there's also a counter trend within the consolidation area as well, where, if we test the upper red band, which is the small band, right, we can look for counter trend trades at that level as well. And then the same thing, if we reach the lower small band level, the Keltner channel 1, we can look for counter trend trades long that opportunity too. The last one is going to be a trend continuation opportunity, and that's when we reverse from a bigger band to a small band, and instead of going within that small band, we actually hold that small band and start reversing back up. So think about it like your classical pullback trade. So those are the 3 ideas that I'm testing right now. We're going to look at all of them. We're going to acquire some data. We're going to see if all of them are profitable. We're going to see if some of them are profitable. We're going to see if nothing is profitable at all. But I like coming in each and every winter, giving you guys these updates. I think this is a crucial time of our trading where, again, if you're new, I just heard an interview on our site by Brendan who says, hey, he wants to get started live trading January 2, but only if he can get every single thing done. So this is a part in a time of the year where a lot of aspiring traders are trying to kind of cross the T's and dot the I's and make sure they're fully prepared to get started the next year. Or if you've been already consistently profitable, this is a good chance to dive back into the books, get that growth mindset booming, and start doing things that are going to help take your trading to the next level. So I hope that you guys are doing the same. Again, not sure if I'll see you before the new year. If I don't, Happy New Year to you. If this comes out before Christmas, Merry Christmas to you. And until next time, plan your trade your plan. Take care.